everybody, happy Sunday and welcome to episode 6 of the Stock Trading Pit. Today's agenda consists of 4 segments as always. Segment 1 is going to be talking with traders. Dan interviews Danny Naz, aka the Pup of Wall Street, and asks him a couple questions about how he got into trading, his style, and even more things about his subscription and how he sees the market going forward. Segment 2 is going to be the broad market recap, looking at SPY, QQQ, IWM, and VIX. Segment 3, I'm going to be going over the watch list with Greg Krupinski, and really he goes over quite a few stocks within the 18 minutes that we had to talk about the different charts that he was looking at. So definitely make sure to check out that one. Segment 4 is going to be 5 charts into next week, requested by you guys as always on our Twitter page. So sit back, relax, and let's get started.
Hey everybody, Dan Ushman here, and this is another episode, another segment of Talking with Traders. Today I've got a great guest, Danny Naz, or as you know him online, the Pup of Wall Street. Danny, thanks for being here.
Thank you, Dan DeMan. Nice to be with you.
Nice to have you here. We were joking around about the wisdom of your parents and giving you the name.
Absolutely.
Kudos. It's truly the best name out there.
It is.
So again, thank you for being here. Let's kick it off. My first question for you, and I ask everybody this, but what brought you into trading? How'd you get your start here?
So actually, it's been a journey for me. As a kid growing up in the 80s, I was always into computers. My dad was a computer nerd. He was a human resources director for a big pharmaceutical company, and he was always into the stock market. And back then it was paper spreadsheets, then turned into Excel spreadsheets. And, sadly, we lost him a couple of years ago. And in going through his paperwork in his office, I came across all of these spreadsheets. This was just 2 years ago. So that kind of brought me to where we are today. So really where it started for me was 2008. I had just started my current business and had some extra money. My business was doing good. And I'm like, oh, let me start playing around with the market, and made some money, lost some money, but I got hooked. And then fast forward, I guess to 2017, this is probably a familiar story. The Bitcoin boom, got hooked on crypto, made a lot of money, lost a lot of money, and made a vow to myself in 2017. I basically, the deal I made with myself was I have 3 years to learn technical analysis, because the money that I made in Bitcoin and the other cryptocurrencies, I lost because I didn't understand the fundamentals of the hype cycle and technical analysis. And so that's what really started my journey. Then by happenstance, posted a chart on Facebook. An old high school friend saw it, said, hey, I didn't know you traded, brought me into his WhatsApp group. That turned into me finding TrendSpider back in 2019, and it's only been up from there. So it's been a wild ride, and trust me, wasn't something that I thought I would be able to make a business out of and make a living off of, but it's always been a passion of mine, and I'm just really excited to be doing what I'm doing right now.
That's a fascinating story. I started in 2008 too for the first time, and I got destroyed very quickly. So when you trade, do you tend to swing trade? Do you tend to day trade? What's your style?
So when I first started out, I think like most people, I started out day trading. I thought, let me throw myself to the lion's den and see, what I can do. And of course, that didn't work out too well. But over the years, I've really found that my niche, my go-to is swing trading. And very much in the trend following style of Darvis and Livermore. I'm more of a compounding on the way up in some respects, but then sometimes I'm taking big positions and scaling on my way out. And what I found over the last 2 years, and listen, I day trade, I scalp. I have position trades on, so I'm pretty much doing everything. But my bread and butter is swinging small caps. That's what I love to do, and that's pretty much what I do really, really well.
Why small caps and not large caps?
I find, well, so that's the interesting thing. I actually day trade large caps,
Okay.
And I find with the momentum and the liquidity, it works really well for me that circumstance. But with the small caps, what we've seen in the last, 6 to 8 months, they're starting to really outperform the rest of the market. And I just like these smaller names, the Fubos of the world, that they're just really, they move. They can, and if we've seen, some of these stocks just explode, 2, 3, 400% in months. And
Yeah.
I've never traded a market like this before. So, I mean, maybe crypto, but of course that's just a completely different monster. But I've just really found a knack for scanning, finding really great setups and just attacking them.
Is it the float you think that gives
Probably.
the small caps that property?
Yeah, probably. I never really looked at it from that standpoint, but yeah, I mean, like I said, I just like, everybody knows the big names, the Teslas, the Microsofts, the Apples. But for me, I'm really looking for trades that are going to 3x, 5x, 10x in a couple of years. And you're going to get a lot of opportunities in small caps right now to do that.
I tend to agree. I tend to gravitate towards small caps myself as well. So I get where you're coming from. When everybody is talking about Apple, it seems like it would be harder to trade Apple.
Yeah.
So
Yeah.
So when you're swing trading, do you tend to buy high and sell higher? Are you more of a buy the dip type of guy? What's your overall approach towards choosing entries?
So I started off mainly as a breakout trader, only because I felt like that was an easier way for me to trade. Sure, buy high, sell higher. But in the last year, I've become a lot more capable in my trading, and so now I'm looking at more building fib clusters, using Fibonacci, and buying pullbacks into support, using pullbacks to EMAs, using pullbacks to volume shelves. Not to constantly belabor this, but TrendSpider's really transformed the way I have traded. I told Jake this, I'll tell you this. Just the tools, simply the tools that I use, from the volume shelves, even the anchored VWAP has been amazing. It's really changed the game for me. So I can't really thank you guys enough for putting out the product that you do, because it really has made me a better trader.
Thank you. So you mentioned mentioned anchored VWAP and the volume shelf, two of my personal favorites too.
Yeah.
I don't know how to trade without them anymore.
Yeah.
What other indicators do you use?
Not much. So that was the one thing, and I think I talked about this with Jake. When you first start out, you have every indicator known to man at your fingertips, and I think with great power comes great responsibility. So what I've realized is less is more, like most things in life. And so I've narrowed it down basically to volume shelves, anchored VWAP, some EMAs, and something that I've been really using a lot for the last 2 years, which is the TTM squeeze. So with those few things, I really am able to identify my setups, along with trading patterns like wedges, cup and handles, head and shoulders. I love identifying patterns. In fact, it's ironic how that works, because in my business, I run a print and pattern global design company. And what we do is manufacture prints and patterns for major retailers. So ironic that I'm the guy who likes to look for patterns within the stock market to really gain my edge in the market. So
That's fascinating. I've had a number of people I've met, and actually James, who was our guest last week or 2 weeks ago on the show, was also talking about his art background, right, and how that helps him, look at charts and see, patterns on them. And I've noticed that, it's kind of a thing, right? Like a lot of traders are very art oriented, right? They're not
right.
science people, they're not math people, they just are artists.
Right.
So
And I think as an artist, it really helps me see the charts. And one feedback that I've gotten from a lot of people, whether it's the members of our group or just people out in general FinTwit areas, that they love my charts because they're simplistic. But I keep them simplistic because from an art standpoint, I don't want it to be cluttered with lines and graphs and numbers and words and letters and whatever. I'm trying to tell a story, and I'm going to try and use as little as possible to really tell that story.
Amen. Charts are just a way to communicate ideas.
Absolutely.
And if you can do it in a way that's clear, someone looks at it and doesn't need explanation, you've done your job. So I totally agree.
Cool.
So while we're talking about patterns, what's your favorite lately? Has it been the falling wedge? I've traded a lot of cup and handles myself lately.
Right.
But I'm just curious, what you've been seeing.
I mean, falling wedges are great. I really like symmetrical wedges. Believe it or not, I think it's easier for me to see them and to understand when I'm using my other indicators, where they're going to break. But I don't really have, let's say, a holy grail, so to speak, pattern or setup. I like to think of myself a bit more as a chameleon. I can attack the market in any way I see fit. And especially in the market that we're in right now, you really have to be, you have to be fluid. You have to go with the market. And so like a day like today, that market was pretty choppy. It's harder to just rely on one very particular setup or one very particular pattern, especially just like I said, trading the way the market has been trading these days.
Absolutely. You have to be adaptable and,
Yeah.
and flexible, right? Otherwise the market will be flexible and adaptable for you.
Absolutely.
So I got to ask, did you play with GME or AMC or cost or any of these pumpers lately?
This is just a wild story. So I that wasn't my intention. I wasn't certainly going to play the game. I've been there, done that. However, before this madness started, one of the guys in our room called out AMC lottos, the six call lottos for last week. He called it out the week before, and they were 6 cents. Suffice to say, I sold, at 6 cents. I bought a good amount. And I made a lot of money on that. And it certainly wasn't my intention, but it happened. And it's not something I would recommend anybody to do. But like I said, the setup was there. There was a technical setup. And with what was going on, one of the guys called it out. I looked at the chart. I was like, you know what? Looks pretty good. Let me take it. And then 2 days later, obviously, it just absolutely just exploded. I don't remember what my highest fill was. It was probably around 4,000, 5,000%. The majority I exited at around 3,000%. And I did roll some into this week. I bought some extra lottos just in case. Who knows what's going to happen there? But yeah, I mean, this is, wow. This just reminds me of 2017 with Bitcoin.
Yeah.
Or what was it, 2018 with Tilray, where it went to $300. Yeah,
the weed pump.
Yeah, this was just wild. So, the way I always talk about this is these are the things that we watch for and we prepare for, because they are going to happen and they're going to happen again. You just have to watch for it. If you know how to play it, you can make it less risky. But of course, there's always going to be people that this was the first time they see it, the FOMO kicks in, and the next thing you know, you're bag holding GME at $350.
No kidding. I think the real test of who's a trader and who's just a piker after this GME AMC thing will be is who kept their gains.
Yeah.
Because I imagine a ton of the people on Wall Street Bets or wherever that bought at 350 will ride it all the way back down.
Yeah. Yeah.
And that's sad to see. When you have gains, there's no shame in taking them.
Absolutely.
And a lot of traders get caught up in the greed of it all.
Yeah, and that's where really having a plan, having a trading plan, knowing when you're entering, where you're exiting, where your stop loss is going to be, where you're going to take profit along the way. I have a saying in the room: no plan, no trade. Yep. It's really that simple. And if you do break that rule, I'm very much about rules, especially when it comes to trading. If you break your rules, you're going to have to, potentially bear the consequences of it.
Yeah. Yeah. Which usually means complaining on the internet.
Yeah, of course. For whoever will listen.
Yep. I think my favorite FinTwits account of all time is this account called Bag Holder Quotes.
Oh, geez.
Yeah, it's hilarious. It's sad, right? But it's pretty funny to look at, and you're just like, okay, I've been there, right? And this guy is going to have even crazier quotes, a week down the road, right?
Right.
So curious, what's the next thing? What are you looking at right now? What's the next sector or name that you're eyeballing?
So that really brings us to Aunt Kathy and Uncle Chamath.
Okay.
Genomics and SPACs. I think that is really what's going to be hot. It's what's hot now. Kathy Woods obviously is, just a genius. Love following what she does. I think there's a lot of hidden gold in watching what she's buying over at ARK. And so genomics, I think we're at the cross section in the world of and the time and place where we are with technology, with CRISPR, with genomics. And I really think that it's going to continue to accelerate, especially considering the pandemic that we're in. I think things like CRISPR can help in formulating solutions for an ever-changing world. And then, of course, with Chamath and what he's doing with his SPACs, trying to change the world, one business at a time. As an entrepreneur and as a business person myself, I have a lot of respect for someone who's willing to put it on the line and continually do it. Very similar to Elon Musk, who started off with PayPal, and now he's changing the world one company at a time. So you have to have a lot of respect for these people who they're multimillionaires, many times over, yet they still put it on the line every day. So with genomics, with SPACs, I think early on, Kathy would call 3D printing. It was a little early, but I think that that is something that's going to, especially with this new space ETF that she's putting together. I think 3D printing is going to take us to other worlds. That is going to be a necessity. So, but I think genomics for sure. I think we're also breaking out of a multi-year base in biotech. Agreed. So I think that's also very interesting. Something we should also keep an eye on. But that's what I'm looking at it from a macro standpoint.
Do you look at macro and kind of big picture, fundamentals and things like that often, or what's your blend between technical and macro kind of decision making?
It's very little, I have to be honest. I would say I'm 95% a technical trader. Okay. What's in front of me, what the chart is telling me. I will, of course, if I'm going to be holding a position for a long time, of a longer swing or more of a position trade, then for sure I'm going to do some fundamental analysis on the company. I want to know what I'm getting into. And we have to also keep in mind the macro environment as far as what's going on geopolitical. Our emerging markets going to continue to break out, and so I'm always looking for opportunities in that respect. But I really let technicals dictate, how I trade.
The price will discount all information.
Yeah.
So, well, cool. That's fascinating. I think I'm running out of time here, so I'm going to have to careen into my very last question. But Danny, what advice would you give to a brand new trader?
I've thought about this. I've seen obviously this segment a lot, and I've thought about this question. It's one of the reasons why I started a mentoring service outside of my trading room. For me, had I known 5-10 years ago what I know now, I think I would be a much different trader, and my journey would have been pushed along much faster. But what I would say first, I would say don't be afraid to jump into trading. I know there's going to be traders that are going to push back on this. Some will say paper trade, and I think that's fine. But I think as traders, we have to understand that it's mostly about emotions. I think learning how to trade technically is not that difficult. If you put the time and effort in, you can learn how to trade. But it's that emotional part that really, really will kick in and change the way we're going to trade. And I think with paper trading and fake money, I think it's great to test strategies, but it's not going to really help us become better traders overall. So of course, start small and then go from there. I think the next thing I would say, you're going to hit a wall in your learning process. You're going to start to stall. And that's where you want to either hire a mentor or join a group of other like-minded traders. That'll help you get over hurdles and accelerate your learning process. And I think the last thing that I would always tell a new trader is absolutely journal every single trade that you do. What I found with myself and with the students that I work with, after they're journaling for, let's say, 6 months, you start to have an understanding of what works for you and what doesn't work for you. And that'll also help you build your rule set. So if you know that, you don't trade financials very well, then you know what? Rule number 1, don't trade financials. And I think building that rule set early on really helps you get on that path of success in trading.
I agree. I wish I had a mentor when I first got into trading. When you're alone and flying around blind, right, you make a lot of rookie mistakes.
Absolutely.
It's kind of the definition of it. So thank you very much for that. I'm sure a lot of people watching will we'll get something out of that, and I really appreciate it. If for those of you watching, if you're interested in getting to know Danny a little more, learning about the pup, maybe participating in his trade room and mentoring service, we put links in the description to all of that. So be sure to give him a visit. And Danny, thank you for being here. It's
Thank you, Dan. Appreciate it. Thank you for everything that that the team over at TrendSpider does.
Thank you. All right, we're going to head back to Jake for the next segment. Thank you, everybody.
Alrighty, let's take a look at the broad market, starting with SPY, looking at the daily candle versus the weekly candle. On the daily side of things, you can really see that we had this huge volume shelf forming pretty much since this January 29th low. So remember, we are measuring the volume from this low, and you can see most of that volume was really taking part over the last 5 days of price action, and a lot of volume was aggregating here and pretty much acted as a nice launch pad for price on Friday, just an absolute rip to the upside into the close on Friday. And then if you look at the weekly side of things, I mean, as crazy as this sounds, we are kind of just bouncing off this longer term support here. So you can see here that we have the solid line and then the dashed line, taking into account both wick to wick, but also the body to body here. And it creates a zone rather than just one line, and really gives us a better idea of what's going on. Now, as you can see, I mean, we kind of have clear skies above. This is one of those ones where maybe you want to create an alert, add a little bit of sensitivity here, click touch, have it remind you on the 30-minute candle, name it resistance above, have it expire in 99 days, and then you don't have to really look at this chart again. And honestly, a lot of the time, just letting your winners run and letting the market do its thing is generally the best approach. Trying to trade around this, you know, who knows what's going to happen. But all in all, I mean, there's definitely clear skies above. Really strong candle on Friday for SPY, but also in QQQ as well. You can see here if we anchor the volume by price from this January 29th low as well, same thing was forming here. Quite a big volume shelf over the last 5 trading days. You can see the volume aggregating and creating kind of a base for price to move to the upside. Now, on the weekly side of things, on the Qs, you can see here that we've really moved up nicely through this 1.618 extension. You can see this acted as a level of interest just for price to kind of stall out for the last 2 weeks. Finally broke through it. And now, you know, if we continue up over the next few months, this 2.618 extension above could be the next level to watch. So definitely something to keep in mind. Obviously, prices don't go straight up, but this would be another target above to watch. Same thing, you can go in, create an alert, a touch whenever the price touches anywhere within the zone, have it expire at the 30-minute chart, and set it for 99 days, create the alert and forget. So, you know, that is something that you can really do nicely on the platform, is just really create these alerts and then let this system watch the price action for you. So you're not staring at the prices all day. Now on the IWM side of things, you can see here, same thing. We did have this January 29th low here, and you can see a lot of volume forming. So this is pretty much just the same chart across all of these ETFs. The only difference is this did not hit new highs here. So this is kind of flagging into next week. And you can, in the short week, that is, we have the holiday on Monday. And you can see here on the weekly side of things, we broke through the 1.618 last week, and we're continuing up now. So the 2.618 above area would be the area to watch. Remember, you don't want to just watch one exact price level. It is 291.34. You know, if it was me watching this, I'd say 290 to 295. Prices do not have an exact target. So a nice breakout here, same thing. You could easily go and create an alert at this top level here. And if you remember from last week, we did have some pretty strong statistics on the seasonality side for pretty much all these ETFs going into February. And if you do remember, VIX had a pretty low win rate, and that's exactly what we're seeing here. I mean, the VIX is just absolutely melting at this point, and we are starting to finally fill this gap below. We hit new lows here from November. So this is definitely showing that with the VIX hitting new lows, SPY is definitely gaining some momentum here and some strength. And this is something that I wanted to point out. We went over this chart on the weekly side of things a few weeks ago, and you can see how well this area continued to act as a level of interest for just weakness for VIX. And this just kind of proves that you can use technical analysis on VIX, but it shouldn't be something that, you know, is just an end-all be-all. It's just something to keep in mind. And it was really interesting to see how well this worked as a resistance zone above a couple weeks ago. So will we fill the gap below? That's a pretty strong bearish candle here, so we'll have to see. But all in all, we already did fill this gap above that we were talking about a couple weeks ago. So now it naturally makes sense for this to fill the gap below, and then that would make sense for SPY to start continuing to, or not start, but continue to melt up as it just literally keeps melting up. You know, a lot of people keep trying to short the market, and it just keeps going up. So remember, when rotation happens in the market, that helps fuel the next leg in some of these ETFs. You don't always have to have the same stocks going up for the market to go up. The market goes up because these new stocks start to take over and help push the indices higher. So that is the broad market recap. Hopefully this was useful for everybody. We have some more charts to go over in the weekend chart requests. So stay tuned for that. And thanks for watching this segment. Let's get on to the next one. All right, everyone, welcome to the watch list segment. We're going to go over some charts with Greg Krupinski. Greg has really used the platform in a unique way, the way that really fits his style of trading and the way he looks at the markets. And so we're going to be looking at some different stocks that he is keeping an eye on, and just overall how he kind of looks at these charts and what he looks at to possibly look for entries and exits. So Greg, thank you for coming on and sharing some of these different charts with us. What do you have for us today?
Hey, thanks a lot for having me, Jake. Congrats on all the big things you have going on in your life. Sounds like a busy time.
Oh, yeah.
All good stuff. So
thank you.
So today I wanted to look at just kind of give a general intro of my style, what I look for in charts and entries. And then I have a couple weekly charts I'm going to go over, and then a few daily ones. We're recording this as of Wednesday, so all charts as of close Wednesday, February 10th. All right, so I'll start here on my screen is Etsy, and this is just an example. So, you know, I try to keep my trading as simple as possible. I work a full-time job, so I depend heavily on the alerts within TrendSpider. I live and die by those. You know, I set them up during the weekend or at night just to give me those alerts that come through text, email, when my prices hit the levels of interest. So this is an example here in Etsy of a pullback trade I made. This is such a clean example. You know, you can see the resistance here, 166, goes back up, tests that same level, has a nice bounce. And then here, I didn't enter it there. But here it's doing the same thing. It comes back. Now we have a trend line if we connect the two. But I don't trade when it hits the potential support level. I want to see that it is support first. So I want to see some candles, maybe with some tails on the bottom. So I'm entering right in here, and breakout trades are a little bit more fluid for me. When a chart's breaking out, I might not take a full position all at once because my stop level, if it's moved up 5% before the breakout and my stop's going to be, you know, 8 to 10% below the price, I'm not going to take a full position. I only risk 0.5% on each trade on the entry of my portfolio. But on a trade like this, I know pretty well if it gets under that 192, this low from the other day, I'm going to get out. So I could size a little bit bigger there. And then as it comes up, maybe take some profits as an old high. I'm still in about 3/4 of this one here. You could see at the end of the day today, it's holding that level from the previous high around 225-ish. So that's just an example. You know, pretty simple method of trading I have. I trade either pullbacks to prior resistance once they start acting as support, or I trade breakouts. Like, you know, nothing different than you see a lot of people posting charts on Twitter. Try to keep it simple. So that's an example there. And also a chart I like. I did put earnings dates on some of the charts I'm going to review. It's just, you know, this time of year, it's important just to keep those in mind. If I'm in a winning position and it's been working for me for a while, I might trim some, but I'll hold it into earnings because I want to hold for the longer term as long as it's working. But I don't want to enter a new trade, you know, really close to the earnings date. So just something to keep in mind.
Makes sense.
Okay.
So your style is really a mix of horizontal levels and kind of diagonal support resistance as well, just to kind of look for confluence between these levels.
Absolutely, exactly. I'll use, you know, diagonal trend lines and different things like that. I'm always going to trade off of that horizontal level, but when it matches up with something else, even better, right?
Yeah, absolutely. Nothing like a little confluence it's just not one perspective. And that's the thing about the markets. You want to have multiple perspectives, not just one, because if you aren't doing more than that, you're really kind of, I don't want to say blinded, but you're not looking at the whole picture sometimes. So I love the fact that you're using horizontal levels and diagonal levels, which is sometimes interesting because, I know a lot of people who are either diehard diagonal or diehard horizontal levels. And so it's nice to kind of mix the two and get a feel for both.
Absolutely. And the same you could throw moving averages or anything like that in there as well. They're all tools and they're all helpful in the right time. And you want to have confidence when you enter a trade that it's going to work, but at the same time, be flexible enough to know exactly when you're wrong, so you can get out small. So,
Yep.
Yep. All right. So this is the monthly chart. I just wanted to preface. I really like the potential of silver and some of the metals names. That was the case at the beginning of the year, and it was looking really good the first few days of January. But then I've had really no reason to be bullish since. So I really this is hard to explain to someone who doesn't look at charts. Like, I really like silver, but I want to see it clear this 27-ish area. That's a hard. If you like it, wouldn't you rather buy it at 25 than 27? And the answer is no, because I don't know if it's going to get through 27. But this is just a monthly chart, so that's a big spot to keep in mind. But I wanted to look down at the weekly here in silver, and just no indicators, just looking at it. It had this nice consolidation. It might have popped higher, but it dropped, and now it's kind of forming this nice kind of round base. This candle's kind of weird. That's with the silver squeeze stuff going on, but even with that, I kind of like the way it's shaping up for a breakout. And then if I throw some indicators on here, I have the volume by price anchored from that low about a year ago. And that just kind of, I use the volume by price a lot. I know, Jake, you're awesome with using that to show potential trade ideas. It's just kind of another visual for me to say, this area is really important. You can see that price has traded a lot here, but look how many shares have traded here, and the base being formed. So I really like this look on silver. Again, it needs to kind of come up to the 27-ish area. I do have some small positions, but I'm probably about the biggest silver bull you can find, but I don't really even have a position right now. But I'm just kind of stalking this one. But I wanted to point this out because, a lot of people just don't want to trade metals. They don't think they have a permanent place in the portfolio, and I kind of agree. But there's a time to own, a silver and gold, and a time not to. And when stocks are doing really well and they're not, why waste your money on something that's not doing well? But silver, this is a rare situation, but starting in 2001, for the next 10 years, silver outperformed the S&P 500 by 850%. So that's a time where you want to own silver versus stocks in general. So I'm not saying that's going to happen, but I am saying if silver can get up over that $27 level, I think it might be a nice, longer termish trade that's in the works here.
Yeah, the silver squeeze thing was that was just weird. And that's the weekly candle is so weird too from last week, but definitely an inside week forming. It's one of those things that it was just interesting to see that Wall Street Bets or whoever was trying to move this just really failed, at least initially. So we'll see if it can break through. But I mean, based on the fact where silver was in 2011, 2012, where it is today, I mean, it would definitely make sense for higher levels. Now, the question is some of that money that was in there in 2011, 2012, is that funneling into crypto instead as an inflation play or something like that? So it's an interesting one, definitely to keep an eye on.
These two charts, so another way to play silver, this is the junior mining ETF. You can see just kind of doing nothing since last summer. But if silver starts going, you start going. Just another place to look.
Is this leveraged or just an ETF?
It's just the ETF. It's the junior miner ETF.
Nice.
And then along the same lines is the GDX. Again, no reason to own this really since, last fall. But you can see here, anchoring the volume by price to that low, we're right here. huge volume, volume shelf. And then we have the anchored VWAP, coming in, and it's been trading down kind of in this flaggish type pattern. And just recently, it hasn't made it all the way down to the low. So maybe buyers are stepping in a little bit earlier here. Again, to get me interested, I want to see a kind of break out of this pattern. But this is definitely just something that I have my eye on that I wanted to point out, because again, if these miners start moving, a lot of them move together. So if a lot of them are moving together, I prefer to play the ETF, and it has options on it too if you like to play it that way. But if it's going and trending, it can really go, and it's not there yet, but I really like the potential here in GDX as well.
Love it. And what moving averages are those?
This is on the weekly chart. I use the gray one's the 40 weeks, so about the 200 day, and the red one is the 10 weeks, so about the 50 day.
Got it.
All right, now for some individual stocks I'm looking at. First one is DBX, Dropbox. Now they report earnings, I believe, next week, so just something to keep in mind. But I like the way this is a newer IPO, and I really like the way it's shaping up here. I'll move the anchored volume by price there to the IPO date, and you can see again, as you can see it from price, it's a lot of shares have traded just below the level that we're at right now.
Mm-hmm.
And there's your.
When did that IPO? Oh wow, 2 years ago. Okay, so it's kind of new, but I thought it IPO'd sooner than that. So it's definitely trying to form its IPO base. Kind of nice inverse head and shoulders there as well, trying to get through that neckline.
Yep, exactly. And it kind of did it right here, and it said not so fast, but it didn't come back too far, and now it's back above it again. So this is one, I again have a small position on it. I'm going to kind of wait for earnings next week, but I'm not in a big hurry with the setup like this, the big base on the weekly chart. I don't trade all names like this, but for one like this, it could have potential for a kind of a long-term sustained and sizable move. So I'm kind of just waiting to make sure that the setup's just right. But in the meantime, I'm in a little bit.
It makes sense. That's a beautiful chart.
Yeah, I like this. I like this one quite a bit. Next one is Zoom, and I'm also in this one. I'll move the anchor point. We'll just do it from the low there, and about a year ago. And again, this one's been, since it made that high last fall, it's just been dead money. But now it's starting to perk back up. You could see it kind of broke the downtrend line there. A lot of volume you could see through here right at this point, and that's where I started buying this last week, and I think it's still buyable. I'm going to switch to the daily chart.
Yeah, I've seen Zoom definitely become more popular over the last few weeks, because I mean, for a while there, nobody was talking about Zoom, and it seems like it's finally kind of being talked about. The sentiment's coming back for sure, and kind of the same pattern, inverse head and shoulders they're trying to form. And
yep.
What is that? I'm not sure what moving averages those are, but definitely crossing through the longer term moving average there.
Yeah, this is the red one's the 50 day. And, moving averages, I feel like are kind of a hot topic. Some people use them a lot, and then some people say they don't act as support and resistance. But if you look at it in a chart, you can see if a certain average is, I'm kind of in the moving average camp, like prove it to me. Like if you're the whatever moving average, but this is the 50 day, obviously a popular one. You could see here it was support, turn resistance, and then all of these points here, it's just trading in a really tight range, and it couldn't pop over that moving average and just that price range. So I started buying a little bit here, but then as it popped up there, that's when I really was able to buy a lot more aggressively, because I know my stop is just going to be really close behind. So, for me, if I have a really solid place to put the stop, and it's not, just a couple percent under price, that's where you can really, size up, and I could stay within my risk parameters. Everything's based on a percent of my portfolio, but you can really get a nice size position without risking too much. So I like Zoom a lot right now. It maybe needs to, settle down a little bit because it's had a nice run after that candle. But I made a note there so I didn't forget. Just the raindrop on this thing on that day that moved up was beautiful.
Oh, yes. Yes. And I know you like the balloon raindrops. So definitely cool to see you using these quite often in the content you post on Twitter.
Yep. I love them. Such a unique way to look at them. And I feel like I underutilize them. I look at them from time to time, but and just the follow-up day then, kind of that inside day, but the volume on both of those days was just in such a tight range. So just maybe, feel pretty good about holding that position right there. And then, it had a nice up move the next day. But it was a nice looking raindrop out of that little tight range there.
Beautiful. And then, sorry, the green and the blue are which two moving averages?
The blue is the 21-day EMA, and the green is the 10-day EMA. And sometimes I keep those on my charts. When I'm in positions, I usually look at them more just to kind of, manage my levels, make sure I'm on the right side of the trend. But a lot of times when I post charts on Twitter, I don't have any moving averages, or I'll just include, the 50 and 200 day. So I'm kind of back and forth. But right now, my standard look on the daily chart would have those 4 moving averages. And I use indicators. I'll use RSI. Something I've been playing with is looking at RSI. I'll look at it for the stock, and then I'll look at it for I use VTI instead of SPY, just to kind of give a momentum comparison. I could pull it up here, and it's just because you can kind of see with Zoom, this is RSI of Zoom, and you can see as this is VTI, as the total market's momentum kind of really went down those days. The other week, Zoom just kind of hung flat, so that's showing relative strength there. So that's another reason that got me in that position in Zoom.
Interesting. And it looks like the shorter term moving average crossing through the 50 has been a nice signal. I mean, before, was that back in October when they crossed down, that was definitely a signal for some further downside. So the fact that they're starting to break up through the 50 now is definitely an interesting view as well. And we'll definitely see what happens. But Greg, I think our time is about up, but you definitely have gone over more charts in our typical segment than most people. So definitely locked in some great ideas. And we always appreciate you coming on and sharing your thoughts and your just way of looking at the markets and your style of trading, and just your overall transparency is great. And everyone should give Greg a follow on Twitter. He's got some great content that he posts all the time. Very easy to digest. It's nothing, that you really have to think about. It's just very straight to the point, and just really clear and concise technical analysis. So, Greg, thank you for being on the show and sharing your thoughts, and looking forward to having you on again soon.
Really appreciate it, Jake. Take care. Thank you.
Hey, you're welcome. And we'll see you soon.
All right. Sounds good.
Alrighty, we have 5 weekend chart requests to go over. These were all requests that came in through Twitter, and I noticed that some of these were mentioned a couple times, and that's kind of where we got these 5. We're going to start out with CCIV. This has been a really hot stock over the last few weeks at this point. Pretty much from when it really took off on January 11th, it hasn't really stopped more than a couple days. The one thing that I want to point out here is the fact that we had this really nice symmetrical triangle forming. We had this volume shelf forming with pretty much the anchor at this pivot point on January 28th. And so you can see how well this acted as a launch pad for this symmetrical triangle. Anytime you have some type of flag or triangle like this, definitely keep note, especially if there is a volume shelf like this, you generally resolve to the upside. That does not mean it's going to happen every time, but this is just a good case study on that happening. Now, on the weekly side of things, we don't have a lot of price action to go off of. All I did here was I just did a fib measured move, pretty much the length of this first candle from January 11th. And you can see how well this 1.618 extension almost acted as a perfect level of interest above at first. Then we blew right through it. And then we kind of closed a little bit above this 2.618 extension here. for this week. And if we continue up, this 3.618 extension would be the next area to watch, which would be around $49 to $50. So congrats to those in this one. This has been a huge mover. CRM is the next one. If you guys remember CRM from last weekend, we were going over that monthly chart and we were talking about the seasonality was really ripe for this particular chart for February, as well as the fact that we did have that bull flag. And so that really resolved nicely to the upside. And if we anchor the volume by price, let's turn it off on the daily and anchor it on the weekly from this capitulation point, you'll see here from this March low, we had this huge volume shelf here, pretty classic for the price action to undercut it a little bit. Anytime you have a volume shelf and you have price breaking down through it, that's generally around your capitulation point. We saw that in HYLN this week as well, just very similar. So one thing I want to point out here, just a great case study on this area of liquidity above that was, let's say, starting around 242 all the way up to 248. And then remember this volume gap, there was no volume here. It was very low liquidity. And that's how the price was able to move up very quickly. And then we pretty much stopped right at this next supply zone above. So a nice move off the volume shelf over the last 4 weeks. And then a perfect case study on just this hitting overhead supply, at least for now. We'll see how it goes. Now, another one to remember, if you're using the platform, especially with these symmetrical triangles or any type of pattern, whether that's an ascending triangle, whether that's any type of pattern, pretty much. I don't have to name them all. But in this case, you can literally just go in, create an alert on both sides of this pattern, and you can choose. Do you want the alert to simply just be when the price breaks down? So you just click breakthrough and you click the 10-minute candle for the confirmation candle. Remember, if you have the confirmation candle at the daily candle, that means you're not going to get the alert until once the day is over. Here, whenever the 10-minute candle closes below this line, you'll be alerted. So we can name this support below, and let's have this expire in maybe 20 days. Then you create the alert. You do the same exact thing on the other side. You then move this confirmation candle down to 10 minutes, have the breakthrough. Remember, you want to move. You don't need the sensitivity for a breakthrough alert because the sensitivity is only for when the price is touching that area. With the breakthrough, you need the price to actually break through and close through that original line. We'll name this resistance above. Choose an expiration, let's say 20 days as well. And then we just create the alert. And so now you don't have to watch CRM anymore. You just have the system watch these levels for you. And who knows, maybe you're someone who's only trading breakouts or breakdowns without any bias. You see that there's a setup here. If it breaks down to the downside, maybe you're playing it short. If it breaks to the upside, maybe you're playing it long. Let the system help you be a lot less emotional and a lot less biased on these things. Let the pattern play out, and then you just play the way the price action goes from there. So this is a great example on CRM with this setup forming here, and we'll have to see what happens into the coming week or so because we are getting pretty close to the apex of this symmetrical triangle here. So all in all, really strong bounce off the volume shelf on the weekly, and we are still slowly starting to move up after filling that gap around 238 earlier this, or what was that? I guess that was technically last week, but pretty much filled it right to the top here this week. So all in all, I wouldn't say it's the strongest weekly candle, but you can still see this is lagging the broad markets so much. Broad markets are hitting all-time highs. This thing is still, let's see, our all-time high was up here in the 280s. And so we're still down 14% from all-time highs on CRM. So is this one going to be a laggard? I think so, but my opinion really doesn't matter. We'll have to see what happens. Going into the next one, Workhorse. This one was kind of the poster child of electric vehicle stuff. And then it has really just been a disappointment this week, at least. I mean, it had a huge run, so you can't be too disappointed. But this is another one where I turn on the anchored volume by price here. You can see that we do anchor from this swing low at the bottom. You can see that the price is starting to consolidate a little bit and catch either a little bit of a bid, or more likely what's happening is that everybody's back to break even and they're less likely to sell here, which is allowing the price to not move down as much. When everyone's holding at 42, 43, and you bought in at 36, it's a lot easier for everybody to start selling because they have profits to sell. Once everybody gets back to break even, it's not so easy to sell, or it's not as logical to sell because you don't have any profits to sell. Now, on the weekly side of things, Can this drop back down to this previous level of resistance that we broke out through a couple weeks ago? Maybe. We'll just have to see there. But if it does happen, just go in, create that alert on the line, add a little bit of sensitivity, because I can't imagine that going all the way down to that area. But you just add that area with a touch, 30-minute candle. And remember, if you're using a weekly chart, the confirmation candle is going to be higher than if what you used on the daily. So the lowest time frame you can go down on the weekly is the 30-minute. The lowest time frame for the confirmation candle on the daily chart is the 10-minute. And if you go down to like a 30-minute chart, you can even go down to a 5-minute confirmation candle. So same thing here. You would just go in, create your alert with how much sensitivity you want, and you're set up for the weeks ahead. And we'll just have to see what happens here. But all in all, there's a lot of volume holding in these mid 30s all the way up to really $40. On to the next one, we have TWLO, Twilio. This thing is an absolute monster, and really, more of a case study than anything from last week. We had this huge area of volume aggregating right around 398, 400. And then this acted as a beautiful launch pad for price to the upside this week. And you can see that this thing had a very strong weekly candle. If we did continue up, that 2.618 extension would be an area to watch above. Why are we using extensions? Well, because we have no other price action to look at, right? We're hitting all-time highs. We can't go back and say, hey, let's extend this horizontal level from this previous high. We are at the highs. So you really, especially when you're in price discovery mode and you really have no other price points to look at or pivot points from previous price action, you just want to use the extensions because one, they work, and two, they likely work because so many people use these extensions and they become a self-fulfilling prophecy. And you can see that here. Look at this. 4 weeks in a row, this 1.618 acted as the level of interest for sellers to kind of keep price stalled here. And then we finally broke through this week. So really looking strong into the week ahead. Going into you. This is one that I've seen a lot of people talk about, and this thing finally is looking pretty strong. I mean, if we anchor it from this beginning point here, we have a ton of volume holding right within this area. You can see a really strong hammer on the daily chart here. You can see that we have this volume gap above. The volume gap is something that we talked about just on CRM a couple charts ago. And there's just not a lot of liquidity up here. So as the price moves up, it's likely not going to hit a lot of overhead supply until you get to all these people who are now holding at let's say that you bought at 150. You're holding at about a 17% loss right now. So as the price gets back up to break even, there's going to be some people that sell simply because they break even and they want to get out and they want to find something else. Some people just don't want to take a loss. They'd rather break even and then move on. Another one is the weekly side of things with this anchored VWAP. And why are we not anchoring it from this IPO? Well, we actually capitulated this next week. So you can see here that we have this start candle, but we actually hit a new low on September 21st and really didn't look back, or the week of September 21st, and really didn't look back after that. So I want to anchor from this actual flush point here, and that's when the status quo changed. This is when we stopped everybody out and continued up and made new highs. So, I mean, you can't really get much closer than this on the anchored VWAP. We literally almost tested this to the penny here this week. And we now have 3 weeks red in a row. And we are starting to see some signs of this kind of doji forming here on the weekly side of things into the short week next week. Remember, next week is a short week. We don't have trading on Monday. And a lot of people forget about that. They go into trading options into a long weekend, and they're in the weeklies for next week. And they're like, oh, I forgot that I'm losing a day. So anytime that there is a holiday and you're trading options, I'm not giving advice on options, but there's a lot of people that forget these long weekends kill the time decay on these weekly contracts. And I see it all the time. And I just wanted to mention that because, that is something that a lot of people forget about. So all in all, really a pretty strong week for the markets. Obviously not you. It was a pretty weak week here, but starting to show a little bit of a consolidation, maybe some accumulation going on here. And if we do turn on the gap snake, we know exactly where this gap is above, right around 147. So if we did continue up, not only do we have this volume gap, but we have an actual price gap above too. remember, you can go in and you can simply create an alert. Let's say that you want to be alerted right when the price closes this gap. Right click, create an alert at this line. You don't need any sensitivity if you want to know when it exactly or completely closes. Click breakthrough. Whenever the price breaks through this upper part of this gap, that's when we know that the gap will be fully closed. So just wanted to mention that, especially for these stocks that do have gaps above, this is a great tool to use when looking for them. A lot of the time, there's price action that you really can't see the gap that well, and the gap snake will definitely help you find some of these gaps that you may not be able to see that great. So that is all for the charts. Hopefully everybody had a great long weekend, and Monday we also have a break from the markets. So everybody have a great week of trading starting on Tuesday. And remember, if you have any questions, you can always reach out to us on our Twitter DMs. They're open. Or you can just reach out to hello@trendspider.com, and we're happy to answer any questions you have. If you do become a customer or start a free trial, we do have those one-on-one demos. So you're not just starting with a product that you have no idea how to use. We have the free trial, the one-on-one demos. We're definitely there to set you up for success using this product. And if you have any questions, remember, we're always there to answer them. Everyone have a great night, and thanks for watching.